What's up, everybody? Good morning. Welcome to today's edition of the Daily Market Commentary. It is Hump Day. It's the day where we are rolling over to the second half of the week. Hope you guys are all having an absolutely amazing day. We're going to do what we do each and every day, looking at our futures markets from an educational perspective, identifying breakouts and reversal trades. Do me a favor, if you're new to the channel, give me a subscribe, hit the subscribe button, share the information out with others. But we hope that you enjoy everything that we go through today on the session. If you're a regular viewer, hit that thumbs up icon. It means a lot. We really appreciate the support. It is always wonderful to have you here with us. Okay, let's go ahead and get started. As always, if you've got questions, please use the chat box. Good conversation is what makes these trade rooms go by much better, much faster, and frankly, they're a bit more fun. All right, let's go ahead and roll out. Starting with the S&P, let me shrink my Chrome Dome here. Starting with the S&P, we see that yesterday we knew we were feeling a bit more bullish after we had come across this swing high and really never got another opportunity to come back on a pullback to one of our good entries. So we did wind up making it up to our 15-minute area of supply, and it gave us a confirmation entry. Confirmation entry halfway in. Came out of the level. We got about a 2-to-1, maybe even a 3-to-1 move away. We came into it a second time and moved away, and then we came into it a third time and popped above it, right? So if you think about it, if we pop above it that many times, eventually that level's going to get worn through, right? So the level did work for a little trade, and some of you, I'm sure, were able to catch a couple of points on that. The next high quality level that we'll look at is right from yesterday's open on a pullback into this region here. Now, this is once again right around yesterday's open where we saw that run higher. But in reality, we're now getting back to nearly back to our highs. Now, we're coming into the hourly area of supply up here, and we're stalling at this hourly area of supply. So the hourly area, while it's still valid, is definitely a bit weak. And so the next level that I would take a look at above there, as far as supply goes, just doesn't exist. There's no real reason to look at supply above this. And so if I get above 38.60, that's where we've got, we're in uncharted territory, right? We're going to explore strange new worlds, seek out new life and new civilizations, and boldly go where no market has gone before. 4,000 in the S&P. We'll see when we get there. But point is that the thing I want to stress, and I talked about this the other day, have the markets shown weakening momentum on the way up? Absolutely. Did that give us a couple of down days worth of trading? Yes. If we continue to set new highs, I'm going to continue to be bullish, right? We're not going to argue with the market. We're going to trade with what the charts tell me. And if I trade with what the charts tell me, right now I've got nearly a parabolic move up here lately. But I've got to go with it, right? And if we continue to roll over a bit, the next area of demand below me would be that 15-minute level down here. Now, could you trade for a breakout above where we are? Can I take this for a breakout trade? Those of you that are so inclined, you can. The downside of this breakout is that it is a breakout just above the Globex high, where we do have some smaller supply that could act as a bit of a trap. I would not take this breakout right at the open. Okay, I don't know that I would like to take this breakout right at the open. I think if I wait a little bit past the open, get away from the whippiness of the opening of the market. But I'm okay with you if you take that, so long as it doesn't happen right at the open. Okay? All right. Next, the NASDAQ. So in the NQ, now we did have a decent breakout opportunity yesterday in the NASDAQ. For those of you that got in there and took that trade, we got a nice little run up. Basing wasn't immediately before the level, but it was very close. And so if you took that, you got a nice little run up. And then price came into our 15-minute supply, and we gave it a quick touch and go out of that level. Once again, hit it again, moved away, hit it again, moved away. So more than likely, you're not getting filled on this level on this because technically this should be a confirmation entry. But if you did take it, you got a little move away from it. In reality, the only time you would have gotten filled based on our rules is right here at about 7:30 last night, and then 6 candles later it had gone nowhere, telling you that it probably wasn't going to go anywhere. So while the level worked, it didn't follow our rules as one that we would get in for. So looking at what our next stopping point is, well, if I look at this on the hourly chart, we can see that here's our same supply level that we have in the S&P, but we're right up against it now, right? We're right up against our all-time high in the Nasdaq. And so getting above 13.6 puts us to a new all-time high. Yeah, Billy, and that's just sometimes what's going to happen on those longer positions if you took that oh, you're talking on the breakout, Billy? On the breakout going bullish? So this long lower wick right here? Yeah. Yeah, if you move your stop up pretty quickly, that would definitely do that to you if you'd move your stop up right away above the breakout. But we still have, a brand new high that we can go from here, right up above 13.6. We'd want to see the basing, obviously, but our basing is still in play for a move up north of the 13.6 level. And that's where I would look for kind of your next best and opportunity would be basing right in here and then a bit of a pop higher. Looking at the Russell. So in the Russell, if I go to my 4-hour chart, we see that we've rolled over a bit. Lower high actually here in the Russell. And so that lower high here in the Russell tells me the fact that we were unable to get the higher high, that there's still not as much strength in our small caps. Our tech stocks are really the leader. So if I just go to major market comparisons, we'll see over the past 5 days, over the past week, we can see actually the Russell is the leader. That's kind of surprising. I didn't anticipate that. I thought the Russell would be a bit of the laggard. But over the last week, the Russell's back to being the leader, followed by the Nasdaq, followed by the S&P, followed by the Dow. Over the last month, let's do the last month. Last 20 days. Yeah, and it holds true for the last 20 days. Okay. So I guess it's really just the last day or two that it's been the laggard. But yeah, so the Russell is still the leader, followed by the Nasdaq, followed by the S&P, followed by the Dow, which is typically, that's not the right button. And typically when that happens, that's going to be a picture for trend continuation of the bullish momentum. And so that's where your breakouts to the upside make a whole lot of sense. As far as individual trading opportunities in the Russell, you certainly have above here where we had that big wick above for that high that we could get to. I think a pullback is probably going to be the better trade on here. And potentially it is right back in this region here at 2100. A little bit of a fair price value area there with some supply over here to the left. It's a bit of a wick over wick, but it's an unbalanced wick over wick. Formed at a decent time of the day, right there, late U.S. market morning, right around the London close, actually. All right, so let me share this pricing grid out. All right, next, moving over to commodities. Looking at our commodities, energies and metals. So crude oil yesterday, we had our breakout trade in crude, which if you're still in the trade, great, move your stop up. If you took the breakout trade, which we had back here, take your stop up and move it to right underneath here. So locking in about a dollar's worth of, about a full point. Then we came up to our area of supply. Now, our area of supply we talked about yesterday is a clean supply level. When I went back and looked at this on a longer term hourly chart, let me just add this time frame real quick. On a longer term hourly chart, and we looked at the origin of that zone, it was this base drop below a pivot high. That's a really clean area, formed right around a U.S. market open. And so looking at that would be an area we'd anticipate a decent reversal. Well, we're basing in front of the level, which is the KOD, right? I mean, that's the kiss of death. We're more than basing in front of the level. We're actually putting in a bit of an ascending triangle in front of the level, right? So the ascending triangle we're putting in front of the level tells us that your better opportunity is probably for price to continue to rally north, and for price to go higher from this region. So if you wanted to take a breakout from here, I'd be okay with that. Your stop has to go underneath 54.87 at the absolute tightest, but I think this actually looks like a decent opportunity for a breakout. Once again, stop has to be below 54.87 at its absolute tightest. And the reason being is that we've got a bit of basing in here. Nice strong move higher. Now we are breaking into a prior area of resistance, right? An area of supply. And so that could certainly act as a stalling point. And if you're not comfortable with that, then just hold off and wait for a retest. The downside with waiting for a retest when you've got these parabolic moves up, especially when you're in these commodities, is that you may not get the retest for quite a while. So, you know, this gives you, and then your next target would be the obvious next area of supply. All right. Gold. Looking at gold, we are still in between our level and gold, but something unique happened in gold yesterday that hasn't happened in a while is that we weren't able to put in a higher swing high or even a swing high that was the same as the others. So it actually sets up for a breakdown below this 1831 area if we continue to get basing. And if we don't continue to get basing and we rally back up, you've got some supply levels up here, I think, that are a bit cleaner than when I was looking at them yesterday. I didn't really like them as much yesterday, this area up in here. But it's a better level now since we were unable to put in a new high or even come back up over this. So I think that's actually a very clean level for a reversal, but the breakout is in play at 1831 at this point. Nat gas, yesterday we talked about taking your stop and moving it up. If you took your stop and moved it up, you did great. We said if we get back to these highs, then take your stop and move it up to here. And so if you did, you took your stop, moved up to here. Either way, you should be out of this thing with a nice profit. So that gap and go worked out pretty well, hopefully for a nice profit. So now we look for the next trade. And in looking at the next trade, we've seen a lot more volatility here in natural gas, but our trend overall is up. It's up, but look at these wicks right here. What do these wicks right there tell you, right? If you look at just those wicks are giving us a very, very clear signal. And the clear signal that they're giving us is that they're telling us that there's selling pressure on the 4-hour chart, okay? Selling pressure on the 4-hour chart after price shock. So I would be a little bit concerned with a long. I don't know that I'm going to lean on this demand area here. Matter of fact, I think it's realistic to believe that if we base, you might actually get a breakdown below here for price to drop a bit further. If we base. If we don't base, then look for a retest. All right. And then copper, we are still kind of between our breakout point. Our supply level still exists. It just exists up here. And there's nothing really for me to add on that one. All right. I'm going to zoom in on these a little bit so that when you see the grid, you can clearly see the levels. All right. Any questions? Y'all are being quiet in the chat window today. There's not a lot of chatter in the chat window, so. All right. We didn't really look much at ags yesterday, frankly, because I was running out of time. And so looking at our ag positions, we didn't add much to the analysis yesterday. The only one we really looked at was a breakdown in wheat. And we did get a decent breakdown in wheat. There's a lot of basing. Breakdown occurred actually last night, and so it's continued to run down in the overnight. So if you took that trade, you're actually sitting at about a 2-to-1 reward to risk at this point. So, and you're coming close to some demand. So I would either A, take a little bit off the table, or B, move your stop down to break even at the very least. I think that's really going to be the best way to manage it. Take some off the table and move your stop to break even. From a reversal standpoint, I'd look up to this region up in here right at about 660. Market's not talking. I don't know. It's saying a few things today. Saying a few things to me today. Soybeans are, this is a really nice setup that I see here in soy. We can see the descending triangle pattern here, lower swing highs each time. I think this actually may work for a really nice drop. Now, the downside of this is you might question the room to roam. Kneel before cod. That's good, Steve. I like that. Good reference. You might look at this area here and see that the breakdown does have a little challenge on room to roam. And while I would agree with you that there is a bit of a challenge on room to roam, if we don't get basing, if we get quality basing, I think that I'm not worried about this area of demand because it's already been traded into once, and it was traded about halfway into the level, and now we're basing in front of the level. So I'm okay with a breakdown below here in soybeans if you want to give that one a try as well. Corn, not quite as clean as soybeans, so I like the soybean level a bit better than I do the corn level. Let me share that one. All right. Next, bonds and currencies. Bonds and currencies. So we didn't have a whole lot yesterday. We don't have a whole lot today. Really, what's the ZN telling me to do? If you look at the ZN on a 4-hour chart, what's it telling me? It's telling me, well, I'm probably better off being a seller. Okay. No doubt it's telling me to be a seller. And then when I go to the hourly chart, I'm getting moves down. Problem is I'm not getting any retests back up to quality areas of supply in order to get in to this strong drop. We've rolled over nicely. This 136.2, this breakout point is still in play. And I don't feel like there's a lot of great reversal trades here. Yes, it's moving down. On a swing trading perspective, you can clearly see a very nice clean swing. But if you think about this on a swing trading perspective, if I shorted right here, I'd be chasing it, right? And so I'm going back to a more of a swing trading perspective when I look at this, and I'm looking for this retest up into here. That, I think, would be the best place because of this wick over here to the left. This wick over here to the left is what makes this level more valid because we rallied up, we based, and then we've dropped from it. So I know this is a bigger picture area, and we don't normally look at that, but I'm talking about it from a swing trading perspective at this point. In the euro, so looking at the euro, we have our wick over wick area that we talked about yesterday. I think that's still very valid. Unfortunately, it didn't come back. I thought it would. I thought we'd have a good shot at that one. It never came back into the level. We gapped, had a little gap here, very small, a couple of ticks, gap in the overnight, and prices dropped pretty hard from there, and then rallied back up, and then retested in here. So if I see that on a 15-minute, it'll be a little bit clearer to spot. I guess it wasn't a gap. I thought it was, but I guess it wasn't too big of a gap. So looking at this, I think your only area would be this one right here, this little wick over wick on a 15-minute chart. I think that would be kind of our best level, the one that makes the most sense. Yeah, Liz, I'm a big fan of booking a tea time. Even if there is trading to be had, I still want to book the dang tea time. All right, and then the Canadian dollar. This one's definitely telling me that I should go, pound rocks or play golf or whatever it is I would do. I don't. These are the kind of things that, man, I've learned that I'm probably better off if I just stay away from. Right? Because you think about it, you would trade this area of supply thinking, oh, that's a great supply area, and then you get stopped out. Or you would trade this demand area saying, oh, look, that's a great demand area, just to get stopped out. And so I'm staying away on this one, and I'm not a huge fan of that. Paul, the temperature will be above your age if you decide to come visit Houston. When you come to Houston, the temperature will be above your age. I can almost guarantee it. Just saying. So you're welcome to come play golf anytime. You got to come for the active trading intensive in June, buddy. It'll be nice. Houston in June. It's great weather. All right, let me share this one. All right. And then oops. All right. Last but certainly not least is our second batch of currencies. Astros or Rangers? Alex, unfortunately, Pirates. I've been a Pittsburgh Pirate fan my whole life, and it's painful, but I'm a Pirate fan. So, no. I mean, I like the Astros. I want to see the Astros win, but I'm a Pirate fan through and through. Jason, any bike tour this year? No, you know what? I don't know that we're going to do the bike tour this year. They changed the route, and it went from a 2-day ride to a 1-day ride. And it used to be a 2-day ride halfway across the state of Texas. Not really, but from Houston to Austin, it was a 2-day ride. And they changed it to a 1-day ride, which is not quite the same. I don't have the same people. Most people aren't as interested in doing it with me. So we're gonna think of another fundraiser that we're gonna do for that same organization. But the ride, unfortunately, doesn't look like it's gonna happen this year because it's just not as exciting to do a 1-day ride. Give me my 2-day ride. My thing is I want a challenge, and the day 1 day, I can power through 1 day. 2-day ride, I really need to fight through it, and I need to be motivated by those kind of things. All right, let's see. 4-hour New Zealand dollar. So very sideways, right? Very sideways on the New Zealand dollar. Nothing has changed here really from what we've looked at the last few days, and this kind of like I talked about in the Canadian, you have good levels that you think will hold, and then they get blown right through. So until we get definitive trend direction in the 4-hour, I don't think that we've got a lot of great trading opportunities here. I feel like you're kind of forcing it a bit. And when you look at this even on the bigger picture, you go to the daily chart, you can see why, right? I mean, let's just zoom out a bit and look at the daily chart, and you're like, oh yeah, well that shit or that thing sucks. There's not a lot of great trades there, right? Next, Great British Pound. So the Great British Pound, once again, let's do this one on the daily chart. Right? I mean, and so sometimes we get so caught up in the hourly chart swings that we forget that we need daily chart movement to give us good entry. And right? And I don't really look at the daily chart in the DMC because it's we're looking for intraday opportunities. But the daily chart is what's ruling the day. Japanese yen. Now, Japanese yen, we have a clear what? We got a clear move down, which is why we had the breakdown in the yen from here, and we got a decent move out of it. Now, we tried the breakdown yesterday, as we did get basing before the level. And it was a really nice breakdown. 1, 2, 3, 4, 5, 6 candles later, where were we? We were right back where we started, telling us, hey, listen, this may not work. I think it still may work to the downside, and you could even try the breakdown again if you want to, based on the basing that we have right here. The daily chart is coming to an area of demand, and so I'm really hesitant to really do it again. I think that a retest of the supply is still a good play. And then the Australian dollar. So the Aussie, we did have an area of demand right down here. Obviously, confirmation entry, but we did have an area of demand right down here that we just cut right through. So in cutting right through it and rallying back up, now what I see is we're putting in some nice reversal candles. This is the recipe for price to roll over from here. I just don't have a real good setup for the rollover as of yet. We're going to need to get through this area of demand, and I don't think that's really going to stop it much. And if we get through that area of demand, that's really where you've got room to fall. So if you're more aggressive and you want to take a more aggressive entry is to get short somewhere below here, right? Just know that you got to move your stop fairly quickly once we get down to around in this range, because this is where this is a really aggressive entry. You've got only a few ticks worth of profit potential before your next area of support. But we do believe that support will be broken in service of the bigger predominant trend, and we do have a more well-defined downtrend. If I look at this in the daily chart, you can see, okay, it's really rolling over and starting to head back down, although our candlesticks are not really expanded range. They're all fairly narrow range candles. And once again, our currencies are all slowing down just due to the fact that the US dollar hasn't pulled its head out of its butt and decided, which direction it's going to go. Right? And that's really what we're waiting on. We're waiting on what's the stimulus package in the US going to look like, and how much is that going to impact the further printing of US dollar bills. Dollar bills, y'all. So just something to consider. Hey, do me a favor, if you haven't already done it, hit that like button. Hit that thumbs up, that like button. That means a ton for me, for the computers, and for all mankind. No. So that's really what I'd appreciate it if you wouldn't mind doing that. One more thing I want to share with you before we wrap up for today. Tomorrow is our live trade room. We've got our live trade room tomorrow morning at 7 a.m. So no daily market commentary tomorrow. Tonight is the open forum and options deconstructed. I think we're going to start going to one open forum per month, only because we're having enough live trade rooms on that you can certainly ask questions, and so we may trim these number of open forums down a little bit, and then Wealth Essentials next week. But one thing I wanted to point out is that we have coming up in March. It's not on the calendar as of yet, but mark your calendar today. As of on March the 4th, so Thursday, March the 4th, will be our next Traders Summit. So make sure that you make note of that date. We will be doing a Traders Summit on Thursday, March 4th. We're going to have a CBOE options trader, former CBOE options expert. We're going to have a CME floor trader. We're going to have a crypto expert. So our first ever cryptocurrency expert is going to come on and talk, because I've had a lot of people asking about cryptos, and so it's going to be a cool day. I'll let you know when you guys can register for it, but I look forward to having you in when we do that on Thursday, March the 4th. Remember, those are fun days that we do nothing but education. It's not a pitch fest for Traders Army. It's really just an educational event, and I want you to come and enjoy yourself and ask a lot of questions. So, all right, everybody. Well, that's all I have for today. I hope you guys have a phenomenal day. I appreciate y'all coming in and visiting me today, and I'll see you tomorrow. Peace out, everybody.